Alright guys, back with another video. Try to fix this thing so you could see it better, but hopefully, it's visible to everybody. Now, this is a stock that you know and love. No kidding. This is AMC and then this is GME. But before I go any further to try to compare the two, and try to dispel the notion that these two stocks are the same, they're not. Spoiler alert. I like to tell you that I own GME, but I don't have any AMC right now at this moment in time. And so I'm biased towards GME, obviously, because I own the stock. So take it as you will, just an opinion, trying to share this journey with you, being an investor in GME now. It's no secret, I am a long-term investor in GME now. You could say that, oh, I bought at the top, whatever. It doesn't really matter. Where I bought at, I know that this company is due for a transition and to be a bigger, better company than today, at today's price. Here in front of you, obviously, you see that AMC is at $8.36. Obviously, this is after the split, the 10-to-1 reverse stock split, and then the conversion. Okay, if you don't know the story, follow it before that. And with GME, the last trading date, which was yesterday, Friday, it's at 18.22. Okay, so obviously it's down less than close to 1%. It's not by much. Obviously, it's been kind of sideways. With AMC, though, it's up 2%. And right away, you probably think, oh my God, AMC is better, right? Well, and price movement in one day. But let's go further. In 5 days, it's 12%. In 5 days, 2%. Okay, still better. How about month? Oops. So if you compare month to month, obviously, this is because of the conversion, because of the lawsuits and all that stuff, right? And dilution, all of that. So within a month, this stock is down 77% versus 5% for GameStop. Okay, so let's go to year. This is year to date. Again, close to 80% there, 2% for GME. Okay, let's go to 5 years. In 5 years, AMC lost close to 95% of investor money versus GME making money 3.5 times. So, which means that if you bought GME right here at $4, you would have 3 times that money, $18. Versus if you buy AMC right here at $100 and something, you would have $8 left. No joke. I'm not joking. And so this is the comparison that you have to make because, and even if you compare a lifetime, 95 versus 6 times its money. See, this is 6 times. This is down 85%. So it's a lot, If you compare the two, please be careful when you watch. There's a new movie coming up or about this, right? It's called Dumb Money, and it's Hollywood, and of course, I'm curious to see whether they are depicting the right thing and whether they kind of implying something to you. They want to tell you something. So I bet you anything, they're going to tell you, oh, AMC and GME are the same, and that these two stock moves the same, and that GME, had its run, while AMC perhaps has its run too. So if you compare the two, it's night and day. You cannot compare the two because GME is way better, especially in the financials. So let's take a look at the number real quick. So the AMC is at $1.3 billion market cap. And that's going to be important because, and thanks to Moran's Rant's video, he pointed out the goodwill aspect of it. So I'll show you that one in a minute. And then the revenue comes out to be $4.2 billion. So the revenue kind of close to what GameStop is doing. I think this is year over year, by the way. So, there's no reason why the market cap should be here. But of course, there's more to that. I'll show you in a minute why AMC market cap is so low. Share outstanding, of course, AMC have a lower float now because of the reverse stock splits and conversion and stuff. So 2 times the amount of floats. Look at the cash burn. Close to $700 million there. While GME is closer to 100 million. And it's improving. It will improve. This is year on year. Don't freak out. And there you go. And so there's a lot of it's a beta positive, meaning that if the market goes up, this goes up as well, versus negative beta here for GME. Now, the price target, this is based on the forecast. Those analysts, those, expert out there that has a forecast of, you're going to make 100 upside. So twice your money here. Their price target is $18, sorry. So $18 now is $1.80 then before the split. So just so you know, this is why, if you buy it now, obviously the analysts, think that it's going to go up, twice as much, versus what the analyst is giving GameStop, Now this is unjust, obviously. They want you to sell GameStop to go to AMC, right? But if you do that, it would be the biggest mistake of your life, right? Because you're dumping good money to chase bad money right here. In my opinion, you could form your own opinion if you like. So let's look at who is giving this forecast versus who giving this forecast to GME. Now, obviously, from sell to hold, right? Wedbush. If you do research on Wedbush, I'm sure there's a lot of short sellers for GME in Wedbush. Citigroup, obviously, they're giving them a strong, what's called a strong sell though. Okay, but the price target is 15 to 4. Why is it a sell? It makes no sense to me there. But this is from sell to hold, and the price target is 19 for Wedbush versus, so this guy is Wedbush as well, versus $6 for GameStop. So this analyst is giving AMC at this point in time to be, a whole bunch of stuff. So why are those analysts so enthralled in giving you a buy signal to AMC and not GME? Have you thought of that? There's 5 analysts here. Okay, so I'll give you that pondering to yourself, and let's move on to financials. Now, right off the bat, obviously, this is annual. So annually, right now, AMC only makes 3.4, $3.9 billion last year versus 6.9 billion. That's 5.9 billion for GME. Okay, so if you look at that, and then you look at the operating income versus operating income here, it's not comparable. But let's look at the bigger item here. Okay, remember this is annually. Free cash flow per share. Let's go. Free cash flow per share for GME. Look at this. So they just post a free cash flow positive for GME versus negative, and it even losing more now. See, gross margin 5%, gross margin 23%. Okay. Operating margin 14 versus 5 in GameStop. It's not comparable. Not comparable. Free cash flow margin negative. We want it to be positive, by the way. Negative 21% versus not losing money, right? 1%, I know it's low, but at least it's not losing 21%, right? So you cannot compare the two. You cannot say that these two are the same company. They are not. And that if AMC go bankrupt, GME is going to go bankrupt as well. Not true. All right. What else? So let's look at the cash on hands. Right now, boom, balance sheet, cash on hands. All right. So this is GME. GME has 1.1 or had 1.1 in last year, right? 1.1 last year, and then marketable security. Add together, you get cash balance. While AMC do not have anything. So they burned cash. They used to have $1.6 billion in 21, and then they burned $1 billion in cash and giving you nothing in return, right? What are they reducing? Not much. Liability, a little bit, right? They reduced $700 million in debt. That's not enough to keep this afloat. No. Right? So, yeah, I mean, if you look at the amount of debt here, 4 billion, and then 5 billion, and then boom, jump up to $10 billion total debt. That's a lot. That's like double the amount of debt at this incredibly high interest rate. How can you can't make enough money to pay that off. You can't. As a result, you have negative shareholder equity. Okay? Look at your equity. Positive, negative, negative, negative for 3 years already. Okay? So that is very dangerous. And on top of that, you don't have any asset to offset it. See that? So, see account payable right there? And this is AMC. This is AMC. Look, net cash position. If they were to file for bankruptcy right now, they are $9 billion in the hole right now. Okay? And so, yeah, I mean, the proxy vote could give the ability for retail to change that, but again, retail cannot change this. You can't. But anyway, so let's go look at GME. When people are telling you that GME is going to file for bankruptcy, I don't know what they're reading. Maybe they are, they need to contact me. They need to contact me because I really need to know. Is that grounded in truth? Your truth, thoughts, and opinion that GME is going to file for bankruptcy? Or you just, do not understand what GME is or do not understand the balance sheet. So let's look at GME. Like I said, they have about 1.38, okay, $1.38 billion in cash right here, 1.39 actually. Increased cash position for 9% up from 21 versus If you look at this decrease, increase, 9%. Now I know 9% is not that much, but hey, it's something. And then they have inventory. They had more inventory here. Now it's down. That's good. And then look at the total asset. They have close to $2.3 billion in asset. Total asset 3.1 versus liability, which is higher than the liability. So if you kind of take an account, like subtract this number to this number, you're gonna get positive shareholder equity. This is important. Why? Because at least you have some share left. Let's say GME filed for bankruptcy right now, which I don't think, why would they do that? But if they do, then shareholder will have $1.3 billion on their hand to, So what is that? If you look at the amount of shares outstanding divided by 0.3 here, then that's $4.33. Cool. So I think that's the book value right here. And so, that is an amazing thing, right? And the book value is there were more book value before in 2001, but I'm sure they used that money to to beef up I think the reason being was because of the inventory right here. Inventory was higher, but nonetheless, it is still a good company. If you look at the net cash position, remember net cash position for AMC was negative right here. Hold on, let me see. Right here, $9 billion. Okay, but net cash position of GME is $750 million. $750 million. Not quite 1 billion. But still, meaning that if they pay off everything, right? What is it? Total debt versus total cash minus total debt. So if they were to use the top number right here, these two, total cash minus the total debt, which is down here somewhere, total long liability, I think that's 400 total debt long term. So right here, you minus that, you get this right here. Okay, so that's why it's important. You want it to be positive, not negative, like AMC. All right, so if you look at the trailing loss though, now trailing loss, it's account for 1 year. So from this particular date, each column accounted for one year. Okay, and it's every quarter. Okay, so if you look at that, let's switch this to trailing as well. You could also see the night and day aspect of it too. So let's go to the, hold on, right here, long-term debt versus long-term debt over here. Okay, boom, 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 long-term debt, goodwill, boom. All right, so remember in Moran's friend's video, if you have seen it already, I'll link down below to that particular short, and he pointed out the fact that AMC actually have a $2.4 billion in goodwill. That means it's just intangible asset that is propping this balance sheet of this company up. So they have that much. Now, if the market cap of this particular company is lower than goodwill, it's going to be subtracted from that. While GME do not have goodwill right now. They used to, and they lost money because of that. Billions of dollars due to that. And it comes every quarter. Obviously, if this quarter they ended with this particular price range, they will be hit with this goodwill impairment chart. Okay. And I think that's why they are so in a hurry to put this proposal to protect themselves from the ramification when retail found out that they have to file for bankruptcy then. Okay. And keep in mind, when it bankrupt, retail investors do not get anything. No matter how much you buy the share, no matter how much the share is being bought, not yet purchased, how high it's been, like to the trillions. If it's trillions of share, you will not get anything. What is a trillion times zero? It's zero. See what I mean? Because you're not going to get anything. There's no share equity left in this company. It's in the negative, So, but anyway, so with GME though, if you look at the goodwill, what was the goodwill? Did I point that out already? Yes, there's no goodwill for GME. So that means that it doesn't matter how low the price of GME go, it will not trigger that impairment charge because they don't have anything to hold that up. See what I mean? Like there's no intangible asset here. That's a good thing because we don't want to arbitrary, have those tangible asset and have the bank kind of like lend you that money and then put a goodwill value on those intangible assets. Okay, so if you look at let's see, comprehensive income, now yes, they have to still work on this, and then the retaining earning, they still have to work on this because it's in the negative. We want it to be in the positive. Okay, so I'm not saying that it's out of the woodwork yet. It's still a challenge to make GameStop a better company, but with the massive amount of transitioning with this leadership, I think Brian Cohen did a great job. Hats off to this guy, because I know like he's been working hard to fight the media, to fight the whatever, but he's staying silent because hey, number will speak for itself. Talk is cheap, action is louder than words. Anyway, so I think that's all I have. I hope this makes sense to you. And for a newcomer out there, please do your own research. I know, go to watch your movie. It's going to be shown in AMC. Oh, actually, I have one more thing to show you. And this is just a comparison of the insider ownership versus each other. Let me try to find it for right here. Now, if you look at this real quick, hold on, let me kind of do this so that you see the same one right here. So this is AMC still. If you look at the owned by insider, meaning the executive, the CEO, it's embarrassing. It's embarrassing because it's less than 1%. Institution owns close to 25% because I guess it's in S&P 500 and no, not S&P 500. I'm sorry, it's in those Vanguard, Fidelity, and all that stuff. They had to buy it because the client wants it. It was one of those, whether it's one of those ETF and all that stuff, they own 26% of AMC. But this is telling to me because, again, this is the metric that you should be looking at when investing in a company. You want ownership, insider ownership to be higher. look at the inside ownership of GameStop, 12%. That's a lot. And, a lot of it owned by Ryan Cohen, which is the chairman and the executive right now. That is leading this turnaround story for GameStop. Okay. And it's not over because they just post an incredible second quarter. So go look at it yourself. Don't fall for the BS that the media is trying to portray to you. That this story is ending, that this story is not is not going to happen ever again. This company is good company to own. I could see why there's a concerted effort into kind of make people want to believe that this company is only $6. While this company, even though they have billions of dollars in debt, they want you to buy in. Why? So, all right, it's been a long clip, so I will end it here, and thank you for watching. Okay, bye.